Good morning. Let's cover Grey Wolf. Ticker symbol is GW. This is the chart since the IPO back in 1980, I believe, or perhaps the company is trading for more than 27 years, but my database only goes back to 1980. So this is the all history chart, quite interesting. The stock is still way below its all-time high here at 26 or so. Okay, now the medium-term chart. Well, the stock is approaching an important resistance level here. Medium-term resistance set 880 or something like that. But let's check the short-term chart. The short-term trend is very powerful. Look at this extremely high volume, the highest in 2007. It was let me see here, Grey Wolf, it was 11.3 million shares traded on Friday, and we had this golden cross here with the 50 days simple moving average moving above the 200 days simple moving average. So the short-term trend is bullish, and I definitely like this chart. As for the fundamentals, here we have my valuation model, and we have here the initial share price, which is Friday's closing price. It was $8.6 per share. Initial share count 184.87 million shares, and that has been decreasing over the last couple of years. The company has been buying back shares, so I have a dilution factor of 0.99. I expect the share count to decline about 1% a year going forward for the next 3 years. You can see here, let me see, this is for GW, Grey Wolf, and the share count, look here, this is 2005, 2006. It declined. Look, in 2005 the company had 192.6 million shares, in 2006 185.9 million, and now 184.87 million. So this gives me a final share count of 179.4 million shares. Initial revenue, this is 2006 revenue, it was $945 million, and I expect revenues to grow just 5%. I'm being very conservative here because the historical growth rate is much higher than this. Look here, GW operating revenue. Look at this revenue growth: 250 million in 2002, 285 million in 03, 424 million in 04, 696 million in 05, and 945 million in 06. And this is a compound annual growth rate of, let me check that, just a second. I've done this, but well, 250, where is this? 250 to 945 million for 5 years. It is a 30% compound annual growth rate, and I'm expecting just 5% for the future. Well, just to be very conservative here, because analysts are that way too. As if we go here to Yahoo at analyst estimates, well, they're even expecting revenues to decline a bit, you see. 915 million in 07 and 953 million in 08. However, in Q1 the company already had let me check that again, but I believe it was 242 million in revenues. Yes, 242 million. So I think we'll get to at least 1 billion this year, and the analysts are expecting just 914 million. So I guess they're being very pessimistic here, even more so because oil has been up a lot lately. So I expect GW to surprise on the upside, as it did in the March quarter. Look here, a positive surprise in earnings per share of 17.4%. Anyway, so 5%, and this gives me final revenue of $1.094 billion for 2009. 2009? Yes, right, 2009. Initial net profit margin. This is the net profit margin the company had in 2006. It was 24%, and I expect this to continue. It has remained more or less stable here, so 24%. This is a very nice net profit margin. And this gives me final net income of 262.5 million, which divided by my final share count estimate of 179.4 million means earnings per share of $1.46 for 2009, much higher than what analysts are expecting. Look here, for 08 they're expecting just 81 cents, but I believe they're wrong, because earnings will be probably much higher than these 85 cents in 07, and they'll continue to grow. Why not? The company has been growing for 5 years a lot. Why should it stop now? I don't see it. 0.85 in 07, they already made in the first quarter 0.27, so it doesn't seem credible at all, this estimate. So where were we? Okay, $1.46 estimate for 09. If we apply the industry average earnings multiple, which is, let's check here under competitors on Yahoo, which is for the oil and gas drilling and exploration industry, is 16.86, the average PE. Look here how our company GW is cheaper than its industry average. PE 8.56 compared to 16.86 for the industry. Price to sales ratio 1.65 for our company and 4.52 for the industry average. So trading at much below average valuation here. So I put here the average earnings multiple estimate of 16.86, and this gives me a final estimated share price for late 2009, early 2010 of $24.68, which means a share price CAGR of 42.1%, which I find very attractive. My optimal selling price given this fundamental landscape is $15.81. This is the price where the stock would start returning less than 16% a year, which is my minimum threshold, and double the long-term market average of 8%, which the stock is very attractive. On a 1 to 10 scale, I give it a 9, not because share price CAGR is very high, but I think these numbers are quite achievable, and the company may even surprise us and grow more than just 5%, because it has been growing at a 30% average annual rate for the past 5 years. So perhaps it can grow 10% instead of 5%, and that would make a huge difference here to the positive side. So very attractive. On a 1 to 10 scale, I give it a 9, and thank you. Bye.